In other news, there have been some tangible signs of stability in the stock market as the government continues to maintain a close eye on daily trade. Our correspondent Moon Hye-ryeon reports.
South Korea's market turbulence is beginning to stabilize following the short-lived martial law order last Tuesday, as investigations make headway and financial authorities respond to the situation. In the days following President Yoon Suk Yeol's declaration of martial law and the subsequent lifting of it, the country's stock market and currency plummeted to multi-year lows amid a prolonged impeachment standoff. The benchmark KOSPI dipped well below the 2,400 mark this Monday to its lowest in over a year, while the tech-heavy KOSDAQ closed at its lowest in nearly 5 years. Individual investors in particular sold a total of more than 1 trillion Korean won on the same day, nearly $700 million in net sales across the two markets. The Korean won also fell against the greenback to its lowest in more than 2 years. But over the past few days, the stock market showed signs of stabilization as the KOSPI and KOSDAQ closed up for a third consecutive trading session on Thursday. This comes as South Korea's finance ministry and the central bank continue to maintain their emergency response systems and engage in active foreign economic diplomacy. Since the shock declaration last Tuesday night, finance authorities have held daily emergency meetings, assessing the day-to-day situation and discussing contingency plans. After declaring that they were ready to deploy unlimited liquidity, the central bank began special repo operations to raise short-term capital, while a stock market stabilization fund and an around-the-clock task force are on standby. A key focus of the government's efforts to stabilize the economy has been to relay the strength of the country's economic fundamentals to international agencies and foreign finance leaders. This has come about through interviews with foreign media outlets such as the Nikkei and The Economist, as well as diplomatic meetings with foreign ambassadors. International credit ratings remain stable, highlighting Finance Minister Che's claim that the impact of the martial law incident has been limited on the South Korean economy.
Even though we had martial law, the real economy, production and exports are not really affected at all. So there's no reason to cut the credit ratings right now.
With next year's economic growth projections revised down by major institutions prior to the martial law incident, experts maintain that the looming threat of Trump's protectionist policies on South Korean exports could have a more lasting effect. Moon Hye-ryeon, Arirang News.